What's going on, everybody? This is the Blockchain Backer, bringing you the latest cryptocurrency news and analysis. Today, we're going to be taking a peek over here at the Bitcoin price chart as the price continues to hold the support, ranging down here at the lows, driving everybody out of their mind. But I wanted to come with you with a voice of optimism to show you how these levels can hold in here. As we all know, there's a ton of disagreement out there on whether or not the lows will hold. If they don't hold, how low is it going to go? If it does go lower, where's the floor? If it goes up, where's the top? Lots of disagreement out there in the market currently right now, which is fine. But I had a couple of points I wanted to talk on today in regards to that with where Bitcoin is currently right now. And have we ever seen anything like this before that did go to the upside? So while crypto prices are pretty stagnant, we haven't seen many moves. I don't think there's any sense in really sitting here and debating which way it's going to go. We all just have to wait for price action to play out. So I think focus needs to be shifted more towards macro currently right now, because that seems to be where the action is at, and macro tends to dictate crypto quite often. But to get the video kicked off, I want you to think to yourself, have you ever seen a scenario like this where the prices did go like this? Maybe you were totally convinced this was going to break down some different asset. You thought the asset was going to crumble and die, and you were totally convinced of it, but instead the asset went to the upside. And I'm going to bet it has happened to at least 90% of the people who are watching this video, because it pertains to our asset class and what was going on in 2021. And I think we can make this easier to see if we look at the United States dollar currency index and maybe put ourselves more like that. Do you remember what it was like back then? Laser eyes, diamond hands. The dollar's going to crumble. It's never coming back. Only for the supports to actually end up holding in there for the dollar, with a higher low coming in here and right here at that support level, holding it for many years, right? Over a decade. So off and away it went, polar opposite of what the market expected. But what did we see? We saw a higher low hold. You can look over here at Bitcoin and see the story is very similar of where we are right now. Holding on top of supports, still holding the higher lows currently right now. But as we were there, everyone's screaming this was going to go down. We have the same story happening here right now. But I wanted to give you a little bit of hope if you thought maybe you haven't seen something like this before, and a situation in which it did revert up. Now, where would invalidation happen? Merely just breaking into new lows. But here we are going on 3 weeks, still continuing to hold them. So with Bitcoin currently being where it should be in relation to 2015, 2016, really price is exactly where it should be. And with a continued higher lows still in place, hard for me to subscribe to the idea that it's collapsing just yet. Go take out a new low, start dropping below here, I'll start subscribing pretty quick. But price action is very clear. Higher lows happening, higher lows happening. Even the market cap of Bitcoin at this time was hovering through this range back in 2015. Again, I know there's a ton of debate out there whether we say, hey, no, we start from right here. But the price action of Bitcoin, how it played out to complete itself, the on-chain behavior of what was happening there starting in April of 2021 shows that the crash and crumble actually started back then. We know that we have equal waves. We know that all the strength indicators fell off from right there, just as they had done 4 years prior, right there in 2017 when the peak of the market came in. Lost all its strength, lost all of its strength. Here's April of 2021, loses all of its strength. And again, just like back then in 2017 and 2018, crashed and crumbled. Then we look at on-chain behavior. On-chain behavior shows all the signatures of the peak being back there. And of course, as we even see, it's where macro conditions all start at the same time. But if you are needing an example to see of how could this possibly hold, just remember what it was like when that DXY turned itself around with a higher low after it had left its first range, as we've seen over here for Bitcoin. Otherwise, when it comes to the altcoins, like a completed correction like we've seen in the altcoin market and we've seen in Bitcoin previously through different years, such as 2018 or in 2014, we see the completed correction with a liquidity event down there at the lows. Still just humming along sideways as expected, still just holding. So nothing out of line is happening in the market yet. In crypto, screaming, this thing's going to break down, this thing's going to deviate from what it's done historically. or that it's going to lose its lower low. If it does, we'll start talking about it immediately. But until then, it's just a patient waiting game on Bitcoin and the crypto market to show some life on this support floor. Does it revert its way back up, or does it officially have a trend change? Because as of right now, there is no trend change on Bitcoin. Massive liquidation event, FTX style liquidation event, but no trend change. So when we start to get periods like this, where price action is pretty stale in the cryptocurrency market, I like to look over to the macro markets to see if there's any signs being given out there. So I think it's important that we have a couple conversations here about the actual DXY, because this is the thing that people are going to be talking about in the coming days, especially on Twitter. We're reaching kind of a max pain level here on the DXY, and I'll show you that. And then, of course, talking about the United States stock market in here, because this week has been a red week over there in stocks. Fortunately, we had talked about that previously, that a double bottom could be the case to happen in here. So far, that's not out of line. But in the event of it starting to break down and set new lower lows, that would give us a pretty clear signal of something that shouldn't be happening for the stock market to retain its strength. And as TXMC does a phenomenal job presenting all the economic data showing a recession is coming, whether that is next month or in a year from now, people tend to think the recession is going to happen during price action like this. But you can go back and see that the last two recessions that we've had in the US stock market came after moments like this, where this new high gets set and then everything falls apart, like we did with the great financial crisis and like we did with C19, that this new high gets set and then everything falls apart. Considering my thoughts are that we are ridiculously close to how high we got during the roaring 20s before the Great Depression began. I'm totally in that camp. Recession is eventually coming. And try not to ignore the signs when the things start to present themselves over here in the stock market. As of right now, the continuation of higher lows, as we've seen in each of these circumstances prior, is continuing to hold here for the Dow Jones, even with a big red week happening this week right now. The thing to take notice of, though, in this particular area is that we can actually have this double bottoming area in this flag. The point at which it is that this is now a new low is the break below 33,600 on the Dow. For me, that's the line in the sand that a new low has been set in the Dow, and things aren't looking good. But absolutely none of that is in play just yet. Still continuation of higher lows, continuing to march in here, and as discussed, a double bottom very possible to occur in a move like this. You can see it even had a bounce nearly of equal size in here, shoots up, double bottoms, and then the march upward continues, which would match what we're talking about with Bitcoin, right? Another push up, heading back into retracement levels, and then we'll all see what happens from there. But what do you essentially get here at the very end? 1, 2, 3, 4, 5 excessive ending wave. So everything there still looks fine with the stock market. As we've seen the reverse repo draining. Those are positive signs to soak up some of the United States treasuries so that that money isn't getting pulled from other markets. But like I mentioned earlier in this video, one of the things that's really going to be talked about here in the coming days, I do believe, will be the United States dollar currency index. Throughout all of 2023, we expected a breakthrough the floor to happen. The area to watch was 99 to 100. Support absolutely came in there. We had watched this thing very clearly with a crashing structure of 1, 2, 3, 4. 1, 2, 3, 4, 5, 6, back to 4 within wave 5. Then what do you get? Your ending of 7. We probably talked about this in markets in the morning for months on end, waiting for that to finally happen. It did. Definitely supports have come in here. The things that typically happen in these structures is we head all the way back up in here. There's a huge range in here of this area before finally an A, B, C comes out. To reference ideas of this talked about, if you haven't been tuning into markets in the morning, if you haven't been paying attention to the DXY, if you've been watching really all year long, if you recall with Bitcoin, when we had shot our way off the floor, right? Think of this being 7, this being 6. Hey, stalling out somewhere in here. We probably made a dozen videos talking about that, followed by a long ABC, right? We reference lots of situations where this occurs on the crashing structure. We have 1, 2, 3, 4, 1, 2, 3, 4, 5, 6, 7, rolling back up, followed by a very drawn out ABC to then eventually go up. Bitcoin obviously stepped above its resistance zone, but still continued to consolidate But if you remember the altcoin market, 1, 2, 3, 4, 1, 2, 3, 4, 5, rolls back up for 6 into wave 4 within wave 5. And as we discussed earlier in the year, the cruel summer. What do you know? We do have the ABC play out in here and now waddling. And so while the expectation was for Bitcoin to do that, Bitcoin showed a little bit more strength, still continuing to do the consolidation, whereas the altcoin market did do it right there, the long, cruel summer of the ABC correction. If you'd like to see a video where this is discussed in incredible detail, you could check it out. The bottom is in for the crypto market. Bulls insert reversal structure, Bitcoin and altcoin process. This was published in February of this year, in which we're talking very specifically about this phase coming next. And it really taking most of the year, most of the summer to play out. And here we are in February. This whole video is specifically dedicated to talking about all of this, on how reversal structures play, teaching about the BCB crashing structure, how that was able to pick the top of Bitcoin, and how the expectation would be finding a reversal somewhere within this larger area for a long ABC to play out. While Bitcoin did step up a level, we could see here, even showing this, the expectation remained true for the total market cap for an ABC to occur, which we've now had sprinkled throughout these market cap indexes. But even as shown in here, the difficulty is figuring out where that one's going to happen from, right? Is it going to happen from the very peak, or is it going to happen from just right here? But these can stop at many different places. We could see how low we are here in relation to that, or like with XRP, all the way back to the peak. We've shown this example with Bitcoin as well. 1, 2, 3, 4, 5 rolls back. You can see Bitcoin doesn't quite make it. In comes the A, B, C. That marks the low. Reversal. So be careful counting the crypto market out just yet. But in a crashing structure, it's typically what we're seeing. We're getting very close to the area where a lot of resistance comes in here, and then a longer consolidation takes place, like for the DXY as we're talking about right now. What it does indicate in these types of structures is a reversal is in play. But typically, these things don't go skyrocketing to the moon just yet. There's still another period of consolidation, but still does mark that as the bottom. So expect a lot of discussion out there on the DXY right now as it's reaching an extreme move now. But knowing that we talk about these all the time, it's what we talked about with the DXY all year long. This was rolling back up to wave 4 within wave 5. That was 7. Now we're getting into that area where this thing could just start in ABC at any moment, whether it's from right here today or gets all the way up close to 106 and does it from way up there. But we're reaching kind of the extreme, which extremes always get lots of attention on social media. But there's a very important reaction that tends to happen here at about 106. And this is just something kind of silly I discovered maybe 3 months ago, middle part of June, was why 106 had like been this reaction level of like crash and crumble or bottoms coming in for the United States stock market. And that, of course, aligns with the area where we're like, okay, it really kind of needs to pause out here. So let's take a second to talk about that, because everything moving up to there, I don't think is really going to matter except for a lot of talking heads screaming. But this is the level where things can like potentially get ugly. Like if we break through here, then you see the Dow go set a new low below, 33,600. And then if Bitcoin goes and takes out its low at 24,800, and like all these things are happening simultaneously with the DXY smacking through 106, it may become the time for me to say, watch out, watch out, watch out, watch out. And I wouldn't call this like super scientific, but it's just a little data point that I kind of recognized happening in here. Looking back to like the dot-com bubble when it all popped, it actually popped right when we got through 106 on the DXY back in 2000. The NASDAQ took a massive loss, losing over 70% of its value. Then notice we're above 106 the whole time. By the time we go breaking back down through 106 again, it marks the actual bottom here for the NASDAQ, and the NASDAQ goes into recovery, no longer crashing. The crash is over now that we've gotten back below 106. Then you kind of move over to our current timeframes right now. Once we got through 106, it's where all the recession talk is. It's where everybody's screaming we're going into the great financial crisis, right? This is June and July, right? Bitcoin, June and July, remember all that? Stock market, same stuff, reaching its bottoms, capitulating, right? This is a capitulation moment, getting through 106. Then as we fall back down below 106 again, the bottom is marked and off and away we go. So while drawing a line in the sand saying 106 is this mark where if DXY exceeds 106, that the gig is up, the game is over. I don't think so, but I think if we see like lower lows get taken out on the Dow, and then if we see Bitcoin breaking below its current lows at the exact same time, that it just adds that extra layer of confluence that we watched all the extremes of the market sentiment happen above 106 on the DXY just last year. I mean, do you remember what it was like going through June, July, August, and September and October? Crypto market in shambles, most Googled recession in all time. How many times did you see the great financial crisis fractal laid on top of that we were getting ready to go crumbling into the great financial crisis from right here? We break back below 106 and then the market reverses back up. Price level happens to be the marking of the top of the dot-com bubble pop and marks the bottom of the bubble pop. So it's a data point that's interesting to add on top of the discussion that we're having. In crashing structures, we should be stopping right here at the wave 6, right? Before then ABCing in here, as we've seen with multiple examples in this video and in this video. But as we press on there, this historically is a level of a lot of fear. But if we break through, you saw the dot-com bubble, you saw the panic and fear in all the markets when we just did that last year, it would likely be a confluence sign to go with everything else. So not only does our crashing structure tell us, hey, we kind of need to pause out here and then just go stale with the DXY for a couple of months, it also even signifies as this level as being that the dot-com bubble popped upon the breaking of that level back in 2000. It marked the capitulation of the market here in 2022 and marked the reversal of the market there in December of 2022. So this will be kind of what the focus is on the DXY for the coming time period. Again, all this does signal that is the bottom of the DXY. But what doesn't typically happen is immediate shoves straight to the upside. It's typically going to consolidate. And then, yeah, watch out. The thing's likely going to go whoop at some point. But there's typically a phase that leads up before it that would have confluence with one more move up before what? A recession, before things hit the fan, as the economic data is pointing to, but is also confluent with how our previous hitting the fan moments have occurred, like we did back there with C19 and like we did over here with the great financial crisis. Same thing. It's one more little final excess, and then wham, it all goes really bad. But the more things we can look out for, rather than just saying, hey, if Bitcoin takes out 24.8 thousand, that's really bad. Well, it's like, okay, well, is that just a liquidation? Is that some whale doing that, going and grabbing it because they know that's an important level to retail investors and they're just going to go grab it and then shove the thing up? I think it's important to look to other things too, to say, well, okay, is the DXY signaling big problems too? Well, this was the dot-com bubble pop. This was the panic and worry area from back in last year there at 106. It's also confluent with where we should see some resistance come in here. If you go through there, what do we be seeing? We saw the dot-com bubble pop. We saw the capitulation back in 2022. Likely a bad sign to go cranking through that level. And then at the same time, if we start getting lower lows over there, in the stock market, that's probably a bad sign too, right? So kind of like we have a multitude of things to look at to say, okay, we have a lot of things to see if things are actually really falling apart. And as we could see right now, none of them are. The stock market still has higher lows. Bitcoin's still holding higher lows. DXY, very normal structure, but things start getting very sketchy in the event of a break above 106 over there on the DXY, a break below 33,600 on the Dow, in conjunction with a break below 24.8 over there on Bitcoin. So all of these things look good so far. They look fine, but we at least have things to say. Things don't look fine anymore if these series of events occur. Otherwise, what we see happening in here, we have seen it before. And everybody did get caught off sides on it with that one too at the peak of the market back in April and May of 2021. So I thought all this stuff was really important to look at. These are things that I'm paying attention to right now as the crypto market is just kind of stale at this moment. Eyes are on the stock market, the DXY, like we've been pointing to, the reverse repos. You got the Fed rate decisions happening there on September 20th. I know a lot of people look at the inverted yield curves. Those tend to revert back up whenever the Fed starts cutting, as we all know. Those inverted yield curves, when they go back, that signals the start of a recession, but they also do seem to be timed with the Fed. And I know a lot of people are cheering for the Fed to cut rates, like that's good, but history does show whenever the Fed is cutting, it's actually because something really, really bad is happening, not to keep cranking the stock market up higher. So we'll have that rate decision in 2 weeks. Current expectation is 93% chance that they are paused, but our eyes will be on the DXY and the stock market right now, as Bitcoin is still just hovering right here at these higher lows. But till the next one, guys, you can check out my website over here. This is bcbacker.com. It's over 40 videos, over 11 hours of educational content in here, teaching you how to set up your own charts and your own indicators within CoinTrader Pro and within TradingView, talking about a lot of different effective tools and effective patterns. One of them being the BCB crashing structure, over 21-minute discussion in here specifically about the crashing structure that we've been talking about. It's kind of a fan favorite. It's definitely my favorite structure. Of course, talking about Wyckoff accumulation and Elliott wave theory as well. We did do a little 1, 2, 3, 4, 5 reference here in this video, but also discussing the historical behavior of the cryptocurrency market and a lot of the other things that I've learned throughout the market when it comes to research on improved odds, tokenomics, market caps, crowd behavior, meme coins, and the big one, emotional management. Includes downloadable PDFs in here so you can print those out and see stuff that is discussed in the videos, along with links to additional learning material if you choose to expand on that particular topic. Check that out over here on bcbacker.com. Otherwise, guys, I'll catch you in the next one. Sorry, videos have been a little bit lacking this week. I have been under the weather. I've spent about 55 of the last 60 hours in bed with a slight fever. I'm coming back to life now, feeling good. But all right, that's going to be it for this one, you guys. Thank you so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you could be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.